Welcome to today's episode of the Lady Landlords Podcast. Today we are talking about a very hot topic in the Lady Landlords community, which is seller financing. We have an amazing expert, Mel Dorman, here to answer all your questions, walk us through how to find seller financing deals, how to put them together, what that looks like. So Mel, thank you so much for being here today. How you doing?
I'm doing great. Thank you so much for having me. It's a huge honor to be here with your community.
Yeah, of course. I was so happy to be able to find you because this is such a topic that we talk about, especially with everything that's like going on economically right now in the financial world. People are very much looking for other opportunities, and it
Yes.
always comes back to how can I get around having to put down 20, 25%? Not saying that's always the case in seller financing, but there's some amazing opportunities here. So before we dive into that, Mel, can you just give us a short introduction of who you are behind the seller financing expert?
Yeah, absolutely. So, as of right now, I'm transitioning from being a top realtor for many years and an investor, obviously, to being a financial activist. So, I have a book coming out in a few months called Bank on Your Neighbor. I landed editor's pick for my TED Talk that I gave in the fall, which is a prestigious honor. So, TED is going to market it to millions of people on my behalf because they found it to be a timely and relevant message. And my background is that I used to be a social worker for many years, and my family went through a financial crisis where my dad got sick with Alzheimer's. And that was my wake up call that money really mattered. And so I started studying real estate, full time as a social worker just on the side. And that's what got me into it about 8 years ago. And I was able to, use seller financing in 5 years to retire. So I'm really excited to share that with you all today.
Awesome. That's a big leap here from social worker to realtor to then now being an investor yourself. When you became the realtor, and I know you said you're kind of transitioning completely out of that now, what was that like, kind of doing that on the side of social work before you kind of moved into the investing side?
Yeah, I actually started with the investing side, funny enough. I sent out some direct mail while I was still a social worker, and I landed my first duplex, and it came with about $70,000 of equity, which is what a social worker would make in an entire year. So I realized I was in the wrong industry. And that's when I jumped ships and started realizing, like, okay, I really need to start doing real estate. And so I got my license.
Gotcha. Then at what point did you say, okay, now we're going to go towards that investor track instead of just realtor and social worker?
Yeah, so I actually my dad got sick with Alzheimer's, like I was saying, and I started looking off market for properties, really trying to build some wealth very rapidly for my family because we're blue collar, middle class family and construction workers, that sort of thing. And so yeah, I made that shift. And unfortunately, my dad passed away just about 2 months after I bought my first duplex. And I just looked at his life. I mean, he was a roofer for 50 years, had given everything and still had nothing to show for it in the end. And I really think, like, in America, it's getting increasingly hard to get by. It's harder and harder to retire. And so watching my dad do that, I just didn't want to go back to work again. So I only had $16,000 in my checking account when my dad passed away. I just bought my first duplex with an FHA loan. And in an existential crisis, I quit my day job with $16,000 to my name. And that really started my full-time investing career. That's when I realized I needed to figure out how to buy without a job, without money, without a credit score. How was I going to do that? Well, the answer to that was seller financing.
How did seller financing pop up on your radar of ways for you to buy?
Yeah, so in Portland, Oregon, I ended up stumbling into a community of people that were really doing it. Maybe, 10 or 15 investors that I met at various meetups. They all kept saying the same thing. And so I realized all of these folks were doing seller financing, and that was this niche market that I could learn from. And so I ended up going to a boot camp that summer and learned all about it and just came back and hit the ground running.
That's so cool. I think that shows that power of also networking and getting out there and really connecting with other investors because I that is our power within Lady Landlords as well, that people sit there and are like, well, what else can I do to buy besides, 20, 25% down? And what
Yes.
I think is great is we've been able to help and support other members of ours with different ideas of what they could do. Seller financing being one of them. I've
Yeah.
personally done seller financing myself. I think it's an amazing strategy. So, what made you choose that over other options?
Yeah, I mean, I kind of had to at that point. quit my job. I had, no employment. No bank was going to give me a loan. This wasn't 2007. This was 2017. So banks cared about your income again. And, and so, yeah, I really had to get creative and think outside of the box. And I saw this group of people that were doing real estate very differently, sometimes putting $1,000 down or, $2,000 down, 30-year notes, 2% interest. And I was like, what? This is insane. And so, yeah, I went to this boot camp and I came back with just like a fire in my belly. I was unemployed and this was it. I had to figure it out. And so I was cold calling, door knocking. It was my full-time job, 10 hours a week, cold calling, door knocking on top of that, meeting with people who were in pre-foreclosure initially. That was my first start as an investor. But then I realized really quickly that I could help people who are just ordinary and reach out to sellers who were investors like myself and just have a neighbor to neighbor conversation and create a win-win deal between the two of us where I was helping them retire while I was building my own portfolio.
Awesome. I wanted us to break that down now, right?
Mhm.
Because you kind of gave all those steps there, but I'm going to have you go back and kind
Yeah.
of walk us through that very first deal. So you went to this boot camp, you
Mhm.
were totally fired up.
Oh, yeah.
You got to make money and you got to pay for that mortgage now on this duplex you just
Yes.
bought. So
Yes.
you came back, you have knowledge, you're inspired, you're motivated. What is the first step you take to get that first seller financing deal?
Yeah, so I was going about it a few different ways. I was sending direct mail and I was also cold calling, looking for those pre-foreclosure deals. And I was doing it 10 hours a week. And I would say, I closed 15 transactions that first year, but it was mostly for other investors. It was kind of wholesaling. So I was in
Okay.
the game, I was active. But one time when I was cold calling, I ended up reaching an attorney who was the attorney of a guy who was dead, who I didn't know was dead at the time. So it was a little awkward when he informed me that the person I'm looking to buy a house from isn't existing anymore. So we had a funny conversation. His name was Kelly and he was a bankruptcy attorney and we just hit it off and we became friends. And I think, like, to your point, the power of networking and just saying over and over and over what you're looking for and who you are. And so a few months into the relationship, he ended up saying he wanted to sell his triplex and I was a realtor. So he asked me for, a report to see what the value was. And I remember walking the units with him. And at the end, before I could even say anything, he turned to me and said, I'd like to sell or finance this to somebody. And I knew, like, when he told me he was interested, I knew in that moment, this was the one. I looked up the property. I saw he had a lot of equity. I was really hoping he would say that. And it was like manifestation, just like he said it before I could even say it. And so
Gotcha.
that was really how I found my first deal. It was just a lot of hard work.
Okay, two questions within that before we kind of go to next step here.
Yeah.
So, first, you said you started with sending direct mailers and also cold calling. How
Yes.
did you even know
Yeah.
addresses to send to, who to pick up the phone? You said you ended up with talking to an attorney. I would not have expected that when I'd asked that question. So, how did you know who to call, who to email, who to send an actual letter to? Where did you even find those lists?
Yeah, so twofold. One was I just reached out to my local escrow company and asked them for a list of sellers who would have a lot of equity, mostly in multifamily, but some single families too. So I had my direct mail kind of going in the background, and I bought several properties off of that. The cold calling was a different source. I was partnered with a local attorney who was getting the default notices when people weren't paying their bills. So before it went to the foreclosure process, there's first a notice of default and that's filed. And so that's not public view, but he could see it as an attorney. And so I would then skip trace those folks, call, dozens of different numbers until I got the right person on the phone. And then, just like a social worker, I would convince them not to go to auction and sort of try to bring them into the awareness that this was really happening and there's other better choices. And so they were hard-won closings, I got to say. Dealing with people in foreclosure is really, really hard work.
Yeah.
But yeah, it's how I cut my teeth in real estate and learned how to negotiate well and guide people through these really big life decisions.
It is. I'm going to come back to that in a second. The
Yeah.
other the other question that I had in there before I forget that one was you were looking for people that had a lot of equity, right?
Yes.
And you also stated that with the attorney that since you knew he had a lot of equity in that, you started kind of having those little bells go off for seller financing. Why is that important to have that equity in that property?
Yeah, so for seller financing, the main ingredient is equity because you're making an installment payment. So every month, the buyer is just making a payment to the seller directly. There's no bank involved. And so, in order for them to lend their equity, they have to have equity to lend. And so, the biggest thing that I'm looking for as I'm searching for off market properties are folks that have a lot of equity, who've owned for a long time or paid cash when they first bought the property.
Right. And I want to make sure to highlight that for our members that it's important to make sure that they have that equity. Since there's no bank involved, it's not that they still have that mortgage that now it's paying their mortgage for
Mhm.
them.
Yeah.
but it's really making sure that really you're turning kind of the seller into the
Mhm.
bank themselves. And
Yes.
you're, instead of paying an actual bank or mortgage company, you're actually paying the seller in those monthly payments,
Yeah.
right? So if
That's
that person just has their own mortgage payments, it's not actually seller financing. So
yeah.
that's the key within that equity. So thank you so much for mentioning that, because to me, those are two very different strategies that have
Yeah.
also kind of grown out of the past few years within real estate. So I'm happy that you brought that up and made that distinction. So thank you for pointing that out.
Yeah. Thank you.
With the with then cold calling and having to walk these people through these difficult situations, right? Knowing that there's a possibility of them losing their home, that it's going to go to auction, pre-foreclosure, foreclosure, all those different items. You how did you handle one, dealing with those difficult conversations, and then even possibly more dreadful hangups, people maybe yelling at you, being like, well, how did you get my number? Don't call me. Hey, it's dinner time. Why are you calling me now? I'm at work. Why are you calling me now?
Yeah.
How did you persevere through people
Mhm.
that either didn't want to have conversations or people that maybe weren't so nice to you?
That's such a good question. Big part of being a real estate investor is just having a grit and a resilience towards rejection, because in order to get to that yes, you have to get a lot of people asking a very hard question, can I buy your home? Which is very personal, and it's a very big ask, especially when you're saying, will you lend me hundreds of thousands of dollars in the process? So I think for me, those are my training grounds. Every day, cold calling 2 hours a day, getting rejected repeatedly over and over, taught me that I can survive rejection and it's okay. And, somebody might be having a bad day and I don't have to take it personally. And for me, I started to realize that every no was one no closer to a yes. And so, I would go door knock a neighborhood and I'd say, today I need to get 100 no's, because every 100 no's gives me 2 or 3 yeses. And I would, and I'd be able to double end deals as a realtor, or I'd be able to, find my next acquisition that way. And the grit is what gets you there. The grit and cold calling, door knocking, sending mail, whatever you're doing, it's just routinely being committed to that process.
Did you read the book Go for No?
I didn't know. It's a good one.
You should, yes. It talks about that exact
Yeah.
concept, Mel. So the way that you were describing it, I was like, oh, she definitely read this book. So Go for No, it's actually, oddly enough, that came out of really network marketing.
Uh-huh.
It's a short book. Ladies, go on Amazon, buy it. I think it's like $7. It's literally 70 pages. You can read it in an afternoon. But it goes with that idea of saying what will continue to keep you actually making more sales, finding more deals when you relate it to real estate over time, is actually going for no. The
Yes.
idea that if you go out saying, well, I need 3 yeses, and you get a yes on Monday, yes on Tuesday, yes on Wednesday, well, then you just kind of stop. You don't do
Yeah.
it Thursday, Friday. But if you go out saying, hey, I need, as you mentioned, the 100 no's, cool. You go out, you get a bunch of no's on Monday, but you still get that one sale or
Yeah.
the one property. Tuesday, you go out, you get one more yes, and fine, you get a bunch more no's, you put them in your bucket there. Wednesday, you go out, you got your third one, but it still incentivizes you to still keep going Thursday, Friday. So you got your 100 no's, but now you probably ended up with 4, 5, 6 yeses
Yeah.
because of that. And I do
Absolutely.
completely agree that I feel like it helps train you for that grit and resilience that you need in this business to have
Yeah.
people you know.
Yeah.
Uh, Reminds me of a league of their own, right? If it was easy, everybody would do it.
Absolutely. I mean, just being an investor in and of itself is a sort of stepping off the path of normal, right? It's the normal prescription is go to college, get a job, work for 40 or 50 years, retire at the end. And so being able to break out of conformity and the norm to be an investor is one thing, but then you also have to, just on a daily practice, break out of the norms of, people don't usually ask strangers to buy their home. And that's awkward. And some people will take offense and some people will think it's funny. And there's all these different reactions that come to it, but being able to be resilient through that allows you to break out of the norm and build an extraordinary life.
Or even these days, when somebody calls you and it's a number you don't recognize, what is the first thing you do? Like, oh, who is this person calling?
Mhm.
Why
Mhm.
are they calling me? We automatically have a reaction that 10, 15 years ago we didn't have. We
Yeah.
used to answer our doors when people knocked on it. Now we don't even answer phones when people call it, right?
Yeah.
So we're now kind of combating a lot of those other social changes. And if we want to live differently, as you said,
Mhm.
not just go sit in an office for the next 50, 60 years, we have to be willing to do things that are different. So
Absolutely.
I'm glad you highlighted that. So now you're in this triplex with this guy that you think you are just going to be listing the house for. He mentioned seller financing. Where do you go from that to make this your first deal?
Yeah, so right then and there, I said, "Well, why don't you sell it to me?" And so we went to a bar down the street and, hashed out the details together. And at first, he wanted 75,000 down, which would have been 10%, more than reasonable,
Hmm.
especially since I wasn't planning to live there. A bank would want 25, as you know. And so quick on my feet, I just asked him, "Well, you're an attorney. What would it cost for you to foreclose on me?" And he thought about it for a second. He said $15,000. I said, "Great. Well, why don't we make that the down payment? If I don't pay you, you can use my own money to foreclose on me." And he agreed. He agreed because it would save him on capital gains tax too, because every dollar that I gave him on the down payment, he'd have to pay in taxes. And so we structured it that way. And of course, I didn't have $15,000 either, right? I just quit my job, I didn't have anything. So I asked him if I could raise money with friends, and I ended up calling some friends and they brought in 10,000, which meant I only was out of pocket $7,000. So 5,000 for the remainder of the down payment and 2,000 for the closing costs, because when you do seller financing, the closing costs are like $2,000, not 12 or 15 with the bank. And then what I noticed was that two of the units were vacant when we walked it. And so I just asked him, "Hey, could I have a 2-month delay before I pay you my first payment? Because after all, how can I pay you if I don't have any money coming in?" And he agreed. So during those 2 months, I recouped $6,500 of my $7,000, which meant that I had $500 out of pocket for a triplex in a great neighborhood in Portland, just by the way that I structured the deal.
That's amazing. I love that actually you brought in those private lenders. A whole different episode here on the Lady Landlords podcast. So don't need to go completely down
Yeah.
that rabbit hole here. But how, just briefly, just share how you structured that opportunity with them. Did they get equity? Was it just a loan that they gave you? But how did you fit really using private lenders
Huh?
into a seller financing deal?
That's a great question. So first off, I had the seller financing deal. Since it was so highly leveraged, we did interest only payments, which
Mhm.
shrunk the payment down by a third. So all of a sudden I had a cash flowing, a triplex, right? And when I have something that's cash flowing and it has equity, then I can go find capital partners to fund that, because I have a source of income and they're looking for a source of return. And so I made a bunch of phone calls. It actually didn't take more than 3 or 4 phone calls. You'd be surprised the amount of people that don't know where to put their money. and and so they were excited to join me on the project. So I amortized their 10K over 1 year and I paid them off in that first year with the cash flow of the property. But even so, between paying the first mortgage, the second, I still had cash flow left over. And as soon as they were paid off, I was making about $700 a month. So it
Right.
was a fantastic first deal in seller financing.
Are you still paying that property off at this time?
Yeah, so great question. So what I ended up doing was about 3 years after that, I called up the sellers and I said, "Hey, you know that 5% interest rate that we negotiated a few years ago? Well, it's 2020 and rates are around 3 or 4% now, so I'm not looking so smart." And so I asked them, "Would you be willing to get creative with me?" And they said, "Yeah, I was making my payments. They really liked me. Things were going well." So this is going to get a little bit technical and we can break it down, but I said, "How would you be open to me taking that $700,000 note, promissory note that I owe you, and dividing it into two? So one for 350 and one for 350." And they agreed. And then I took one of those notes and I
Mhm.
put it in second position on some of my other properties, so that the subject property only had $350,000 worth of debt, which allowed me to do a cash out refinance and pull out 205,000. And I bought a 20 unit in Ohio with that. And I named it Other People's Money LLC, because I didn't, there's no money out of pocket. So I bought a triplex and a 20 unit out of that one deal just using seller financing.
That is amazing. That was a really, really smart strategy to be able to get that cash out, to be able then to go up buy the property there.
Yeah.
So I am going to ask you though to go back and walk through now separating out the two promissory notes, right?
Hmm. Yeah. So basically, I when I called them up, I said, "Hey, can I just make these two promissory notes out of your one, which is just drafting two new pieces of paper?" We both signed it. And then one of them was collateralized by the subject property, which was the triplex, the original property. And then the
Mhm.
other one, I showed them all the comps for my other properties, how much equity I had, the cash flow. I mean, just like I would a bank, right? And then they saw that there's plenty of equity and cash flow to support that 350 in second position. And to reward them, I even gave an extra point of interest, right? Because I'm paying off 350, I'm getting a fantastic 3.75 loan, right? I can afford it. There's a cash flow there for it. So I gave them an extra point of interest for participating. And then, yeah, they got paid off with the cash out refi. So $350,000 note that was on the subject property, they got all of that. And they were happy with that because it spread out their capital gains over a longer period of time. And so they weren't in such a high tax bracket. If I had paid them all 700, they would get hit pretty hard. So they were really happy that I was dividing it in half. And then, yeah, and then that cash out refinance gave me that money for the down payment. And what's interesting about that is the 20 unit was also a seller finance transaction. It was an apartment complex in Ohio. They already had a seller finance note on it. So I did a wrap note and I used a land sale contract. So there was a land sale contract wrapping a seller finance contract. And that's how we structured that. So that no money out of pocket, just like, just being able to parlay from one property to another because of the creativity involved with seller financing. You can move debt around from one property to another.
So now that property there, so you have in Portland, where did Ohio enter the picture?
At the time, I just had a bunch of clients that were looking for cash flow and they were like, you got to go there. And to be frank, I wouldn't invest in Ohio again. Like you don't know what you don't know. And I had to buy a lot of 5-ton air conditioning units and I don't even have one of those in Portland. So. But I did great on the deal. I held it for about 3.5 years and I ended up selling it and making $425. So my $500 turned into $425,000 and I still have the triplex too.
You sell the triplex. Okay. How did you find the property in Ohio?
I was networking with a realtor out there in Dayton, Ohio, and he knew some off-market sellers selling larger plexes. 20 unit in Ohio though is like 800,000, which is the same as like a triplex in Portland. So it sounds like a big number, but it's really not that expensive of a property.
Talking to somebody over here in New York, yes, that's like a single family, maybe in the areas that I live right outside New York City. So yes, totally. Markets are very different with what costs are, with what prices look like. Absolutely. So yes, to everybody listening to this, yes, it completely matters where you are. You will probably not be finding a 20-plex in Portland or New York City. Just saying.
A lot harder.
I love all the creativity of what you've done, even within seller financing deals. Any other purchases that you can share with us, or any other terms that you've made work within seller financing that you just kind of want to share, either a story with or just how you made something like kind of play out with a seller to have a deal actually be able to go through?
Yeah, I'll tell you another one. A few years ago, I bought a 4-plex and it was on market. It had been on market for a long time, needed a lot of work. And I was using a conventional loan, so 5% down, and then, the seller, there's going to be PMI and that sort of thing. But as I went to go through the loan process, my lender called me one day after I had already released hard money, or earnest money. And she goes, so sorry, we can't get you PMI. You're going to need to come up with an additional $200,000. And I'm like, oh no. And so, I just thought about it for a second. Okay, well, why don't I just approach the seller? He can cover that $200,000 gap. He gets most of his money with the conventional loan, but he'll hold the note for about $188,000 is what it came down to. And he was really excited about that prospect. He got a 10-year note with me. I ended up giving him about $6,000 to underwrite it for me because I didn't have to pay off the PMI. So I had extra money laying around for that. So, but fast forward about a year later. So what I wrote into that contract with that seller was what's called a first right of refusal, which means if he ends up wanting to sell that note before the maturity date in 10 years, if he wants to sell it on year 1 or 2, he has to offer it to me first. And it's a really important clause, and I'll show you why. So about a year later, I was snowboarding in Lake Tahoe, having a great day, and I get this text message from Brian, the seller, and he goes, hey, that $188,000 note? I kind of want that money now. Would you like to buy it from me? And I said, well, how much? And he goes, $150. And I go, how about 100? And he goes, how about 110? And I said, that sounds good. And so while I'm snowboarding, I text Kelly, who was the other seller I'm telling you about. And I said, hey, Kelly, would you like to hold a second position loan for 110 on this property that has plenty of equity? And I'll give you like 8%. And he was like, sure. Yeah. So he refinanced me. One seller refinanced me from another. And I ended up getting $88,000 of equity and the payment came down $77. So it was a real win-win, but it was all because I had that clause. And that seller wasn't upset with me for giving me the discount, by the way. He hired me as his realtor about a month later. So he was thrilled. Yeah, he was thrilled to get that 110. He was not mad about it at all. But that one clause meant that I got to buy my own debt if there was going to be a discount involved, and there was.
Right. I'm impressed he also came down that dramatically, like on that number too. So I also just kind of want to highlight, like, it just proves, just ask for the thing that you want, see what somebody's going to say.
Yeah.
So, because I when you said that he came back with 110, I was not expecting him to drop his number that low. So
I
that's really amazing. But once again, it was you saying, "Hey, let me ask," and he would have come back with whatever number he wanted to. But that was a huge win right there.
Yeah, and I think again, but all of these situations, I had no money. Like, let's just be really clear. Like, with the triplex, I had no money. When I bought the 20 unit, I had no money. When I got that text message on the mountain, I had no money. But I think one of the big mindset shifts that I've had in doing seller financing is that I don't need my money to buy property. I'm using
Right.
other people's equity, or I'm using other people's cash and capital. And so I'm able to say yes to those opportunities, even though there's no money in my pocket.
Do you, at this point now doing seller financing deals for a while, have you built out a little bit more of like a funnel process to be consistently finding some of these deals, or are you still spending a couple hours a day on phones calling?
Yeah, great question. So I'm a big advocate of having enough. And so I've had 34 rental units. I built a few $1 million of net worth this way. And I'm really set for life. I have that 6-figure income based on my portfolio. So now I'm really shifting my attention from, I'm going to build to I want to make a bigger impact. And so
Mhm.
that's where I've shifted my attention. So now I'm actually just teaching other people how to find off-market deals, how to negotiate, and how to quickly scale their portfolio so that they can participate in financial freedom too.
Right. And I'm going to link that down in the episode
Oh,
later on. So we can make sure that if anybody is interested in getting some support there too, that they can be able to reach out to you and have all your information there.
oh, awesome. Thank you.
Within that, then, what one of the things that I feel like I hear often from lady landlords is either what maybe they're afraid is going to fall apart, what's not going to work out.
Mhm.
What are the red flags that an investor should look for when trying to put together a seller financing deal? Not the seller, but as the buyer. What are
Mm,
some red deals when you're looking at properties being like, this is not a good option, or
yeah.
this is a deal I should walk away with, and seller financing is not the right fit?
Yeah, so one of the things that I teach my students is really looking for the green flags and the red flags for seller financing. So green flags being like they have equity, they don't want a 1031 exchange, they love that mailbox money, they'd rather be a lender than a landlord. Like all those are green flags that you're looking for. But red flags are things like if they need all of that capital right after closing. Like maybe
Mhm.
they have a huge medical bill or something they have to satisfy, or they're buying something else. That's a red flag. They're not a good candidate for seller financing. Another one is maybe they're elderly person and they're not really aware of what you're talking about. They're not really competent enough to agree. Their children should be in the room then, their adult children or another representative who can explain it and make sure that they're really coherent and they understand the terms that they're making. That's a
Mhm.
really important one because most of the people that can do seller financing are older adults, and that's the people who would benefit from it because they're ready to retire. They want that passive income. So that's a really important red flag to be looking for. Other than that, it's just putting yourself, you're the underwriter, you're the one that's designing your own leverage and you're authoring your own terms. And so if you don't have a good mindset around that, and if you're coming at it from a place of guilt or like, I shouldn't have money, you're going to talk yourself into a bad deal. You're going to write terms that don't work long term. And it's a true disservice to the seller too. If I underwrite a deal and I'm negative cash flowing $1,000 a month, that's putting us all at risk. And so really when
Right.
I'm talking with the seller, I'm being very transparent as to why I'm negotiating the way that I am, because I want to make sure that it cash flows, because it's an insurance policy for both of us that the property can support itself. And so I think the biggest pitfall is if people negotiate against themselves and sign up for something they can't actually sustain.
Have you ever done a deal where sellers were on board? And I do hear that often, that it does tend to be people that are a little bit older. Once again, the idea of who actually has the equity in their property, right? Usually you're not talking to a 30-year-old that just bought a property a month ago. They're not going to have the equity to do the deals for it. So you are looking at people that 30 years later now have paid off that mortgage.
Yeah.
Have you ever come across a situation personally where either the sellers were on board, but then their children, their family members were like, no, don't do this, or vice versa?
I personally haven't ran into that. And I think part of it is coming from a social work background and really from an intention of at the heart of everything that I'm doing, I'm trying to help people. And I think
Right.
that shows through. The deal is one thing. Of course, I want a financial freedom. Of course, that's what I'm aiming for. But I've always had the intention of doing it in a way that both parties benefit. And I think that comes through in the offer. I'm spending a lot of time with people in their living rooms, understanding what is it that's going to solve their problem? Why are they wanting to sell right now? What do they truly need in terms of their down payment, or when do they need to get cashed out? And I've spent so much time listening very attentively to their needs that by the time I'm presenting an offer, it's so custom tailored to exactly what they've been saying that it's hard to feel swindled. It's like I'm literally just giving them what they asked for in a way that also meets my needs, but my needs are sort of in the background, that I'm not pushing for my needs as much as I'm drafting something that just works for us both.
To be honest, I feel like that is the essence of what a deal is. It's something that really works for both parties.
Yeah.
You're the one that would be, I'm going to use the word prospecting, if you will. You're the one that's making the calls. You're the one reaching out.
Yeah.
So yes, the onus is going to be more on you or any of our other lady landlords doing this to be able to say, hey, here's how we can put together that deal.
Yes.
But I completely agree that going and sitting and listening and understanding what that other person wants, what that other person needs. And this, to be honest, ladies, is applicable for seller financing deals, for wholesaling, for anything with finding off market properties, dealing with people in foreclosure, divorces, all those things, is really, and actually kind of everything in life, is probably sitting down and really understanding what the other person is looking for.
Yes.
And then you get to kind of decide what you can do, how you can meet those needs. And listen, sometimes can things not work out?
Yeah.
Okay, sometimes somebody is going to ask for something. And once again, this is not just real estate, this is kind of life here. Somebody's going to ask for something that you just personally cannot accommodate and make work. But if you go into it, and Mel, I love that you said this, really going in of how can I help this person is the best mentality you can have.
Yes.
Within any piece of real estate. Yes. And saying, how can we get a deal done, is what is the other person looking for? Can I meet it? Where are my boundaries? What am I able to accommodate or not? And structure a deal that way. And I love the idea of also that you said going back and kind of using their language back into what that deal offer is.
Yes.
The other thing, and correct me if I'm wrong here, but I'm imagining in your process, like I said, please correct me if I'm wrong, that having kind of those conversations, you don't have to also create the terms and write the document in that exact moment. You can say, thank you very much for this information. I'm going to take that.
Yes, exactly.
And I'll come back to you with my offer, right? You're not sitting there being like, well, based on this, okay, cool. Let me just break out my typewriter here and, print out a document.
Yeah, exactly. I mean, I think a lot of investing is through this very simple model. Like the only thing that matters is a price, right? That's what gets listed on the RMLS. That's what the only thing that we're really talking about. But that kind of investing is completely different than what I'm talking about. That investing doesn't take into account the seller. It just cares about the price, right? And when you're starting to like really not just deal analyze, but seller analyze, then you're really understanding what is their needs, what's their wants, and you're structuring it in such a way that it's beneficial to them. And I think like it's about building a partnership and a relationship. And that, can you imagine showing up on a first date and being like, let's get married? Like how much would that freak out the other person? Like, can you imagine writing a love note and that's what you say in it? Hey, I really like you. Can we get married? Like, no. That's not how you start the relationship. Right. You start by just getting in people's living rooms and you observe, that they have photos of their grandkids and they got bumper stickers about funny things on their car. And you start to relate human to human and build a trusting relationship that allows them to disclose their true and authentic desires and needs in a way that you then take back. You do not necessarily make an offer right away. You actually go back and you think about it really critically and you design something and then you bring it back. Hey, what do you think about this? And you go, it's like a process of multiple meetings. I mean, I've done deals that took 2.5 years. It was just following up and asking how they're doing. Hey, how's that bankruptcy going? Are we still on? I'm really ready when you are. Just being invested in people's lives is how you develop the partnership skills so that when you get to that moment and the deal works, they're ready, they sign on the line. And what's beautiful about that is when you're spending the time to invest and really build relationships and you're focused not on money capital, but on social capital, well, then those sellers turn into lifetime lenders. That's not their only deal. They realize, wow, you're a lot better than sticking my money in the stock market. You take me out to lunch 4 times a year. You care about my grandkids. You follow up all the time and tell me how the projects are going. My 401k doesn't do that.
No, especially not these days either.
No, it's just about investing in people, and that return is there when you do that.
I'm happy that you mentioned that because something might be a no now does not mean it's not going to turn into a yes. Yeah. So it sounds like also there's been opportunities, and I love that you mentioned even with just starting with the attorney that you randomly kind of cold called, that you guys kind of stayed in touch and then down the line it was, hey, actually I have a property, want to use you as a realtor,
Mhm.
then hey, actually now you ended up being the buyer.
Yeah.
But I'm sure that there's probably also been other times, and correct me if I'm wrong, but once again, you doing this for 7, 8 years now,
Mm.
that you made an offer, nope, not a fit, okay, kind of we're at a stalemate, nothing we can kind of do here. Has
Totally.
anyone ever kind of like come back full circle down the line, and maybe things had to be structured differently, but has that ever kind of come back in the end and reopened a door for communication?
Yeah, I mean, in that circumstance I was telling you about the bankruptcy, it's like I think a lot of people would hear, "Oh, you're in the middle of a bankruptcy, you can't sell," they just lose touch. And I
Right.
was just very dedicated, I just put it on my calendar. I'm going to call and follow up. And over the years, it just made it a very simple conclusion. When we got to that point, yes, they had a stack of investor letters on their coffee table still, but they turned to me and they said, the only person we're interested in selling to is you. You've been with us for the last 2 years. You clearly care about the property. You clearly care about our situation. You've been very thoughtful how you've designed this. And that deal was amazing. I bought a duplex from them that I could split 2 lots off of. So $100,000 per lot. So it came with a ton of equity. And they knew that I was doing that. They understood that that
Right.
was the process. They didn't want to go through the turmoil of splitting lots with the city or the costs that were involved with that and the risk. So yeah, I think there's a lot of upside when you really take the time to continue building relationships. And there's lots of times too where, it just wasn't a good fit. I've had that 35-year-old investor who owns a commercial property who I'm like, hey, would you sell or finance? And they just think about it for a long time. And they go, I don't think I'm at that life phase. This doesn't make
Right.
sense for me. I want a 1031 exchange. I don't want to sell or finance to you. So, there's a discernment involved, but I think more often than not, if you continue to follow up, the fortune is in the follow up. It's recognizing that even if it's a no now, it's not a no later. And if you just continually be persistent, you'll get to yeses as long as you're reaching out consistently.
So, what is that first step for somebody new in seller financing? Is it finding a list to start calling? Is it people to start sending mailers out? Is it talking to an attorney about how to get a purchase agreement put together? Where do people begin?
Yeah, I think the most important place, and you kind of mentioned this at the beginning of the call, is our communities. In order to imagine the possibilities to be able to purchase something for 1,000 out of pocket or $500 out of pocket, in order to really sustain that belief, you have to surround yourself with people who are actively doing those things, who are little lighthouses of possibility in your life, who encourage you to keep going. Because the reality is, you can learn everything about seller financing. You can read my book, you could take my course, but if you don't have people around you doing it, then you're not going to do it because it's just going to seem like this crazy outlying idea. Everybody else is living their normal life. Why are you sending direct mail? You're a weirdo. You're going to have those sorts of mental conversations. But if you're surrounded by people who are out there doing the work, being bold, living adventurously, and you're able to talk about, oh, this guy called me today, he was so mean, or, you're able to like sort of laugh it off and recognize through community, you have this osmosis of success. And I think Harvard did a study that 95% of our success is related to the people we surround ourselves with. And so I would say first thing is go to a RIA group, go to a few RIA groups, talk to people, try to find people who are in alignment with you, and then take them out to coffee and ask them their story of how they got started and ask them how you can bring value to their business by learning from them. Because, being mentored by somebody who's further along in the process is the best way to learn. And yeah, on your own, I would say. Mhm.
And with that, the thing that I just want to add there too is it's usually not the person that's even in front of you from
Mhm.
like a networking perspective, but every single one of us has one of these, right?
Yeah.
We all have a phone that all has hundreds, thousands. I mean, you could probably find like my high school boyfriend's like phone number back in here. Sorry, hubby. But you know what I mean? Like we keep and we just store and we have all these connections over time. So when you're talking to someone, even if they're not necessarily the right fit, you have to think of all the hundreds, thousands of people that they have
Mhm.
behind them as
Yes.
well, that now having building that connection with that one person,
Well,
what other doors that opens for you. So all
mhm.
because the person in front of you, or once again, the maybe in this situation, the seller that you're talking to, they're saying no.
Yeah.
Who do they know possibly that can even be a fit? So make sure, once again, I'd like your idea of building those relationships and having those conversations with people rather than burning bridges, right? Build bridges, don't burn them.
Yeah.
So I'm really happy that you were able to mention that. What is like one thing that you want to mention about seller financing
Mm.
that you feel like is either a benefit, something you love about it, the unknown thing about seller financing people don't know? But what is like the one thing that you're like, man, we have not touched this, and this
Uh-huh.
is like bam key with seller financing?
Yes. Yeah, this part's fire. So the reason why my TED Talk, I think, is going to be so significant in the TED community is I was really bringing this bigger vision. I discovered seller financing and it radically changed my life. I was able to retire in 5 years from being a social worker to now, where I'm at today. And at first I thought that's what seller financing was about, individual pursuits of wealth. And it was a faster way to do that. But through this process, what I realized is if we collectively did seller financing, we could redirect wealth away from Wall Street back into our communities. Because as it stands, there's about $400 billion a year that goes from American households in the form of interest payments on our loans, $400 billion that goes into the financial system, right? And being able to redirect that wealth, I mean, think about that. That's like an Elon Musk every year, in terms of
Right.
that we're doing, right? It's like so much money. And meanwhile, 60% of Americans live paycheck to paycheck. It's getting harder and harder to retire. And you look at where money's flowing and it's primarily going in one direction, straight up to the top. But we actually have a lot of power in that. We can design our own debt. We can design our own leverage, and we can actually directly trade with one another through real estate. In doing that, I mean, think about Kelly, the first person I told you about, my seller. He made $250,000 because he lent directly to me instead of me going to a bank. And that's the power of it, is we are able to conserve community wealth and make a bigger impact outside of ourselves through seller financing by creating win-win opportunities like this.
That was so well said.
Thank you.
No, that was really awesome. I really like that idea of, once again, what can we do kind of between each other? And once again, kind of stop putting money in other big businesses and really kind of keep it within our community. So that was actually really beautiful. I think that's something that we kind of need to get back to a little bit more. And I think that really just kind of looking at how can we support, once again, community? How can we serve others? How can we put these deals together? And once again, have that conversation, talk to your neighbors, be able to open that dialogue. And you never know necessarily what those possibilities are going to turn into. It can be pretty cool. So thank you.
Yeah, it's really amazing. I think what I'm really trying to do is to create a movement, to create an awareness around how we buy and sell property, and to do it in such a way that the majority of us benefit versus the minority of us. And so, yeah, I'm really passionate about it. Thank you so much for giving me a platform to tell people about this.
Yeah, of course. I've loved what you've built. I'm really excited for what you're doing with your course, your book. So I know you're going to shoot me some links so that I can share with the rest of our community. I'll put those down in the chat. But Mel, thank you so much for being here for today's episode of the Lady Landlords Podcast. I greatly appreciate your time. So thank you.
Absolutely. Thank you.
For any of our other listeners, please do make sure to be following me at Becky Nova on Facebook, and then also wherever you listen to podcasts and YouTube. You can find new episodes every single Tuesday. Thanks so much, and see you at the next episode of the Lady Landlords Podcast. Thank you for listening to the Lady Landlords Podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlords.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.